What if you could sell a property and not pay all the taxes this year? Instead of writing a massive check to the IRS, you spread out that tax over time while collecting payments and interest. That's exactly what an installment sale does. But here's the part most people miss. It's not just about deferring taxes. It's about controlling when you recognize income. And that's where the real tax strategy comes in. Hi, I'm Sherry Ayland, and I help my clients pay little to no taxes using my zero tax blueprint. So what is an installment sale? Well, at its core, it's when you sell a property, but you receive at least one payment after the year of sale. Instead of recognizing all the gain in 1 year, you recognize it as payments come in. Now, here's where I want you to think differently. Most people ask, can I use an installment sale? But a better question would be, what year do I want this income to hit? Because if you're having a high income year, a big W-2 bonus, a business sale, or you made a lot of money on the stock market, then that might be the worst time to recognize a gain. So instead, you use an installment sale to push income into future years when your income may be lower. There are 3 layers to this strategy. In the first layer, we're going to use your high income years to your advantage. If you're in a high income year, you're already probably in the 20% capital gains bracket. You're probably possibly going to be subject to net investment income tax, another 3.8%, and maybe pushing it even into higher ordinary tax brackets. An installment sale lets you say, I don't want all that gain hitting this year. So instead you spread that out. Second, you can engineer your lower tax years. So let's flip it and say, what if you can lower your income in the year of sale? Maybe you max out your retirement contributions. You accelerate expenses into the current year. You use depreciation or cost segregation, or you time other income differently. Now, that smaller portion of the installment income hitting this year could bring you into a zero capital gains bracket or drop from a 20 to 15% bracket. That's not just deferral, that's rate arbitrage. Now, the third layer is planning for future years. This is where installment sales really shine, because now you have time to work with a tax advisor, time to create lower income years intentionally, and stack strategies like real estate losses, entity structure, etc. So instead of reacting after the sale, you're proactively controlling multiple tax years. Let's talk about how the tax works on that. So every payment that you receive is split into interest, which is taxed at ordinary income rates. You have a return of basis, which is not taxed, and you have your gain, which is taxed in proportion to what your rate is. So every payment, part is taxable and part is not. So one thing to keep in mind here is you still have depreciation recapture. The depreciation recapture does not get spread out. It actually hits in the first year, even if you didn't get cash yet. And this is why planning before you sell is so important. Another note, this is not just for real estate. Most people think installment sales is just for real estate, but that's not true. You can use this on selling a business, selling equipment, selling a partnership interest, or even some personal use property like a cell phone. So if you're exiting with any gain, this strategy is definitely an option. Let's go back to the net investment income tax. Like I said, that's an extra 3.8% tax on your investment income. Let's walk through a simple example here. Now, let's say you sell a property and you have a $300,000 gain. Your other income is $180,000. So in year 1, if you took it all in 1 year, your income is $480,000. So now you're probably in the highest capital gains tax bracket, and you have the 3.8% net investment tax on top of that. Just for reference, the threshold is about $200,000 for a single filing and $250,000 for married filing. So again, if you're over those limits, now you're paying an extra 3.8% on that gain. Now let's take a look at that installment sale. Let's say you spread that $300,000 gain out over 5 years. So that's $60,000 per year. Well, now you have your other income of $180,000 and you have $60,000 in capital gain income. So your total is $240,000. With this, if you're married, you're going to be under that threshold. So the 3.8% is out of the picture. And most likely you're going to stay in that lower capital gains bracket. And that's a double win. So when you're figuring your taxable gain every year, this is an important formula to also be aware of. Let's say you sold a property for $500,000 and your gain on that was the $300,000. So then you take that $300,000 and you apply a gross percentage rate to that. So 300,000 into 500,000, you take that percentage, and that is the percent of the payments that you recognize each year as actual gain. So let's talk about the pros and cons of installment sales. The pros would be being able to control the timing of income, potentially reducing your tax rates, avoiding net investment income tax, creating a predictable income stream, and even more planning opportunities. Some cons of an installment sale might be you have less upfront cash. You have a certain amount of risk with the buyers if they're going to follow through on their payments. There's interest that is taxed with ordinary income, not capital gains. You do have the recapture that you have to take up front, and there's more compliance, like more forms to fill out on your tax return. Installment sales are not just about avoiding taxes. They're about choosing when and how you pay them. And when you combine that with income planning, rate management, and a multi-year strategy, this is where this becomes powerful. So before you sell anything, don't just ask, can I do an installment sale? Ask, what's the best timing strategy for this gain? Because that's the difference between just filing taxes and actually controlling them. To see if you are a good candidate for my zero tax blueprint, check out the link below and complete a short survey to get your zero tax readiness profile.